Hey, estate planning attorney Paul Rabalais here, and in this video we're going to talk about how families can pay tuition to avoid big-time estate tax. All right, so here's the deal. Now that it appears that Joe Biden is going to be our next president, and this is not a political video, but it appears he will, we have to anticipate that there's likely going to be some changes to our tax laws. Now we don't know which party will control the Senate for a couple of months, but no matter who controls the Senate, tax laws are likely to change. And I did a video recently, about a week ago, regarding how some people may want to take action right now in the year 2020, even though the estate tax laws haven't changed yet. The idea is that the estate tax exemption may be drastically reduced from its current $11.58 million amount. So many more families will be subject to a 40 or 50 or more percent estate tax when they pass away. In that video, I discussed how some people, if they're comfortable doing it, if they feel like they've got enough to live off of for the rest of their lives, if they want to do things for their children and grandchildren, and they want to avoid the estate tax burden when they pass away, some people may wish to start doing some gifting now to their descendants. It doesn't have to be to the descendants, but it typically is. They can do some gifting now to their children and grandchildren, because depending upon the size of your estate, you may not be able to gift it away fast enough, since you're really only limited to being able to give away $15,000 to as many people as you want to every year. But as your estate appreciates in value, it may appreciate at a rate more or faster than you can give it away. So you'll never be able to reduce your taxable estate for estate tax purposes enough to completely eliminate the estate tax. So there is, most people don't know about this, but there are rules that say, in addition, now remember, in addition to taking, to being able to take advantage of that $15,000 annual exclusion amount that you can give away to as many people as you want to every year, in addition, you can also make tuition payments for others without eating into any of your estate tax exemption amount. But there's some key rules that you have to follow. You know, the example is grandpa's giving grandson $15,000 a year. Maybe it's going into a trust for grandson. But in addition to that, grandpa can also pay grandson's tuition payments. But there's some rules that he has to follow. And again, grandpa can make those payments without grandpa using up any of his estate tax exemption. So a lot of people really like that when they find out that they can do it, but there's a few rules that you have to follow. One, grandpa's payments must be made directly to an educational organization on behalf of a person. Can't give extra money to grandson and then say, go pay for your school with that. And that school has to, normally maintain a regular faculty and curriculum. It has to have a regularly enrolled body of students. And, really formal instruction must be the primary function of that organization. But it can be primary school, secondary school, it can be prep schools, it can be paying for their private high school tuition, college tuition, university. So, really a great opportunity there in the right circumstances to avoid a lot of the state tax. Now, realize that what these tuition payments that you can make in addition to the $15,000 annual exclusion gift, that it doesn't include things when you pay for things like books or supplies or dorm fees or board or other similar expenses that don't constitute direct tuition cost. Now, any discussion about paying for a child, a grandchild's college education, usually the first thing that comes up is, well, we'll do a 529 plan, and that's great. But when you make a contribution to a 529 plan, you're using up your $15,000 annual exclusion gifts. So the extra payment of tuition is over and above what you can do with a 529 plan or with the $15,000 annual exclusion gifts. So if you're sitting right now in that estate size of maybe $3 million to $5 million or more, not sure. None of us know what estate tax laws will be in the future, and in that $3 to $5 million estate size or more, maybe you're not in the least bit concerned about the potential of having to pay estate tax today. But the problem is, thank goodness, you're probably not going to die today. You're going to die in the future. And now, it's appropriate to kind of predict in the future what those estate tax laws may be. And with a new administration come in, you do the math, you figure it out. Your guess is as good as mine. So you may not be subject to estate tax now if you were to pass away, but if you live long enough, and let's hope you do, you very likely may be subject to estate tax in the future. And if you hate paying taxes, then maybe it's something you start right now to avoid that problem escalating and getting much, much worse in the future. In fact, if you're one of those savvy youngsters out there, maybe you're 18 or 19 years old, you may want to watch this video, and then you may want to go to your grandfather and say, "Grandpa, I got great news. 2 things. 1, I just got into your alma mater," and he's going to say, "Fantastic." And then you say, 2, I'm going to save you $100,000 in taxes. And he's going to look at you kind of funny. And then he's going to say, "Well, how in the world are you going to do that?" He says, "Well, Grandpa, don't you know anything?" The 19-year-old says, "If you just look at Internal Revenue Code section 2503 little e, you can make tuition payments over and above the gifting that you're doing to my trust. And you can make those tuition payments, get extra stuff out of your estate, avoid the 50% estate tax on that in the future." And at that point, Grandpa's probably gonna faint because he thought that all you were good at is video games. But now you're showing him some knowledge on how he can avoid taxes. Based on that, he may just take you up on that offer. He may say something like, "Well, geez, I'm 75 years old and I've got all these retirement account distributions I've got to take every year and pay the taxes. And I don't even need the money after I take it out and pay the taxes. So you know what, grandson? Sounds like a great idea. Let's do it." And so grandson's going to go, "Yeah, okay, got my college tuition paid for." So anyway, know that there is also, not addressing it in this video, a similar rule for the payment of medical expenses. Again, particular rules that must be followed there. This video is all about those tuition expenses that can be paid over and above the $15,000 a year present interest annual exclusion amount. That's a houseful. And I've done some other videos on the gifting of the $15,000 present interest annual amount, so you can search my channel for those as well. So last thing, like I do every time, make sure you smash the like button, hit the subscribe button, and the notification bell. That way you won't miss these hot topics as I keep them coming, roughly every other day or so. Y'all have a great day. Take care.